Tag Premium Wealth Series, Value Investing, The Silent Blueprint to Building Generational Wealth. Books available on Amazon, Stock Investing for Poor People and Stock Investing for Broke People. Website, https://tossieadvisorygroup.com. Plots to Profits, coming soon on Amazon. Welcome to the game. What's good, family? I am Jessie Maria Tossie. Welcome to Tossie Advisory Group, the home of financial literacy for the everyday person. Whether you clock in by the hour, serve in uniform, hustle on the side, or just started thinking about your financial future, you belong here. At TAG, our mission is simple: advise, educate, grow. We exist to help you stop living paycheck to paycheck, start thinking like an investor, and take control of your financial future. Because the truth is this: wealth isn't just for the rich, it's for the prepared. Today, we're unlocking one of the oldest and most powerful wealth-building strategies in history: value investing. Now, I know some of you hear that phrase and your eyes glaze over, but stay with me. This isn't Wall Street talk. This is about building real wealth, the kind you can pass down. Value investing is how average people, school teachers, mechanics, delivery drivers, soldiers, have quietly become millionaires over time. It's not flashy, it's not fast, but it's real. And when the world's chasing hype, when everybody's running after the latest AI stock or crypto token, value investors are quietly setting up for the next big comeback. If you learn this strategy, understand it, and apply it with discipline, your money will stop working against you and start working for you. So let's break it down step by step. Part 1. The reality of today's market. Right now, most investors don't realize how concentrated the market really is. The S&P 500, the index most people invest in through their 401k or ETF, looks diverse, but it's not. Over 40% of its total value sits inside just 10 companies. 10 out of 500. That means when you invest in an S&P 500 index fund, you're basically betting on a few tech giants: Apple, Microsoft, Amazon, Nvidia, Alphabet, Meta, Tesla, Broadcom, and a few others. When they rise, your portfolio shines. When they fall, everything in your account feels it. That's what we call concentration risk. It's like building a house with one foundation beam. As long as that beam stands strong, you're good. But if it cracks, the whole house leans. And here's what's wild. 10 years ago, those same 10 companies made up less than 20% of the index. That's how fast dominance grew. The problem? The higher they rise, the harder they fall. That's why experts like Warren Kuntz, head of value equity at Jennison Associates, have been calling attention to the imbalance. He says it's the perfect time to revisit value investing, a strategy that looks beyond the hype to find companies that are undervalued but strong. It's about finding the solid companies that people are ignoring because they're not hot right now. Part 2. What value investing really is? Value investing is the art of buying great companies at discounted prices. Think about it like this. You walk into your favorite store. You see a winter coat you wanted for months. Last season, it was $150. This week, it's on sale for $90. The quality didn't change. The brand didn't change. The only thing that changed was people's attention. That's value investing. It's about buying value when others are distracted by hype. You're not gambling. You're not chasing trends. You're studying the worth of something, waiting patiently, and buying it when the price doesn't match the quality. Value investors focus on 3 things: intrinsic value, what the company is truly worth based on its business, not its stock price; margin of safety, buying below that intrinsic value to protect yourself from risk; time horizon, holding long enough to let that value shine through. They don't care about the headlines. They care about the fundamentals, the heartbeat of the business. If the company makes money, grows cash flow, and has a loyal customer base, it has value. That's how people like Warren Buffett built fortunes, not chasing what's new, but owning what lasts. Part 3. How value investors think differently. Let's keep it real. Most people in the market today are emotional. When stocks go up, they rush in. When stocks fall, they panic and sell. They let fear and excitement control their decisions. Value investors? They flip that script. When prices fall, they get curious. When everyone's excited, they get cautious. They understand that every company has ups and downs, and those dips create opportunity. It's called time horizon arbitrage, meaning value investors think in years, not minutes. They know the market overreacts in the short term. That's where profits are made, by seeing clearly while everyone else is reacting emotionally. When you see a good company temporarily under pressure, that's not a problem. It's a setup. Because when patience meets knowledge, wealth shows up. Part 4. Real value examples. Stories that teach. Let's look at a few real-life examples. Walmart, WMT. Back in 2016, Walmart announced it was buying Jet.com for $3.3 billion. The media said it was foolish. Investors panicked. The stock dropped 7%. But value investors saw something deeper. Walmart was positioning itself to compete online. Fast forward to today. Walmart dominates both retail and e-commerce. That one bad move became a brilliant long-term strategy. RTX Corporation. RTX builds jet engines and defense systems. When travel slowed during the pandemic, the stock fell. But smart investors saw that airlines would come back and defense budgets would grow. Now RTX is benefiting from both travel demand and global defense spending. Alphabet. Google. When AI became the buzzword, people thought Google would get crushed. The stock dipped. But behind the scenes, they were building Gemini, their own AI platform. Within months, Google bounced back strong. These stories show that value investing isn't about avoiding growth. It's about buying growth at a discount. It's about seeing the long-term story before everyone else wakes up. Part 5. Value versus growth. Who really wins? Let's compare the two main strategies. Growth versus value. Growth stocks, like Tesla or Nvidia, move fast. They promise big returns, but they come with big risks. Value stocks, like Walmart or JP Morgan, move slower, but they provide consistency and protection. From 2018 to 2023, growth stocks rose about 125%. Value stocks rose about 76%. At first glance, growth wins. But look closer. When markets crashed in 2022, growth fell nearly 30%. Value dropped only 7.5%. In other words, value held the line. It's like driving a sports car versus a reliable truck. The sports car gets there fast, but crashes easy. The truck? It's steady, dependable, and built for the long haul. When you build your portfolio the TAG way, you balance both. A little growth for momentum, a lot of value for stability. Part 6. How to invest the TAG way. Now let's talk about how to apply this to your life. Start small, start now. Don't wait for a raise or bonus. Start investing with what you have. $25, $50, $100 a month. Time matters more than timing. Understand what you own. If you don't understand a company's business, don't invest in it. Buy companies you use. Walmart, Apple, McDonald's, ExxonMobil. Use the TAG 3-step method. Track your stocks weekly in your journal. Analyze entries, exits, and your reasoning. Grow your knowledge monthly with real data. Balance growth and value. Think of your portfolio like a diet. You need both protein and vegetables. Growth feeds the excitement. Value builds the foundation. Be consistent. Invest through the highs and lows. Automatic investing removes emotion. Review every quarter. Don't check daily. Look quarterly to see if your thesis still holds. If it does, hold tight. That's the TAG system. It's simple, consistent, and proven. Part 7. Minutes 60 to 68. Building a value mindset. Value investing is more than numbers. It's a mindset. You have to learn to love the quiet work. you won't always see quick results. Sometimes your portfolio will sit still while others brag about instant gains. But understand this: the market rewards discipline, not drama. Patience is your superpower. When others chase hype, you focus on quality. When others panic, you stay grounded. When the market dips, you see opportunity. This mindset doesn't just apply to investing, it applies to life. Value investing teaches you patience, discernment, and confidence in your research. It's not just a financial skill, it's a lifestyle. That's why at TAG, we don't just teach stocks, we teach structure. We help you build habits that keep your money working long after you've stopped. Part 8. Minutes. 68 to 76. Generational wealth. The real goal. When you understand value, you unlock something much bigger: generational wealth. Because wealth isn't just about what you earn, it's about what you preserve and pass on. Value investing lets you build assets that outlive you. Your children and grandchildren don't inherit your paycheck, they inherit your plan. Every time you buy a strong stock and hold it for years, you're planting a tree that will give shade to the next generation. That's what we mean at TAG when we say your last name is your asset. And remember, you don't have to start big. You just have to start on purpose. Closing. Minutes. 7680, the TAG call to action. So family, here's the truth. Value investing is not about being fancy. It's about being free. It's about using knowledge, patience, and consistency to build wealth that lasts. If you're ready to stop surviving and start growing, here's what to do next. Visit tossieadvisorygroup.com and download your free TAG starter kit. Join our TAG Premium Lounge, where members share real trades, weekly lessons, and live pre-market sessions. Get your copy of our books, Stock Investing for Poor People, 60-Day Earnings Journal, Plots to Profits. You don't need a mansion to build wealth. You need dirt, vision, and a fence. Follow our socials. Instagram, @Tossie Advisory Group. YouTube, TAG Wealth Network. Weekly pre-market Sunday sessions. Website, w.tossieadvisorygroup.com. Because here at TAG, we don't just talk about wealth, we build it. We invest with purpose. We grow with patience. We trap value like hunters of opportunity. This is the TAG way: advise, educate, grow. Now go build wealth, not hype.